around something that you can't touch being worth a couple trillion dollars. The way I think of Bitcoin is I think of it as a service. The service Bitcoin provides is the ability to store wealth in a digital format without a government or a bank. Now, we're all used to services having value, right? Microsoft provides a service.
On the Resilient Advisor podcast, Bitwise CIO Matt Hougan explains why Bitcoin has value and how advisors can use it. He frames Bitcoin as a service, storing wealth digitally without banks or governments, with value driven by scarcity, utility, and network effects. He argues Bitcoin is evolving from volatile store of value toward broader use and fits in a 60-40 portfolio with a 3+ year horizon, strict rebalancing, and a 1 to 5% allocation. Hougan highlights Bitwise's research portal, addresses quantum computing fears, and discusses single-asset crypto ETFs, including Solana staking products for diversified digital asset exposure. He stresses education before allocation for clients.
Ability to edit Word documents and do Excel and do Teams meetings. The reason Microsoft, the company, has value is that the more people who want that service, the value goes up. Fewer people want it, the value goes down. No one wants it, the value goes to zero. The way that value accrues is if you want Microsoft service, you can write a check to Microsoft and someone in Redmond, Washington will deposit that in a bank, and that's how they generate earnings. The difference with Bitcoin is that there is no one to write a check to. If you want the service Bitcoin provides, the ability to store wealth in a digital format without a government or a bank, you can't subscribe to it. The only way you can get the service is by buying the asset. If you buy the asset, you exist. And that's actually an important thing for people to understand. It's not because someone sat down and created an Excel spreadsheet and said, this is Bitcoin and you can buy it. That wouldn't actually be scarce. People tried to do Bitcoin-like things for decades before Bitcoin. The problem is if you, Jay, create Jcoin, and all Jcoin is an Excel spreadsheet on your computer, and it gets to be worth a lot, you could change the number of those coins that exist. People have to trust you. The example I give that makes people sort of hit this home is imagine if Mark Zuckerberg created Bitcoin, but he controlled how many Bitcoin there were. Would you really trust him to stick at 21 million? Would you really trust him to honor that you owned this one and no one else could take it for you? The beauty, the sort of genius of Bitcoin from a computer science perspective is they made it so you could have a scarce asset and you didn't have to trust anyone to know that that scarcity won't change. You don't have to trust. At some point in the future, countries and entities will want to interact with a non-political currency. They just won't want a currency that a government might devalue for domestic reasons or increase the value of for domestic reasons or seize or monetize. They may want a neutral asset. And Bitcoin is actually the only asset that can fulfill that. So as its volatility comes down, which it's been coming down, I think you'll start to see it pick up the second utility, which is facilitating international trade when people want a non-political option. And I think that's a big market too, and it's not priced into the price at all.
So when I think about it as being a monetary asset, here's where I really struggle. I think, was it Steak and Shake says they'll take Bitcoin for burgers, so you're going to pay capital gains to buy a hamburger? Like, how is that even going to work from an execution standpoint?
Yeah, so that's not going to work, is the short answer for that. The thing about disruptive technologies that you have to remember is they have to be, 10x better than one that's cheaper. They'll never catch on. What we missed is they served this new use case. And as that use case grew, they became more and more efficient and more accepted. My long-term view of Bitcoin as a monetary asset is it will find traction in these niche areas that aren't served at all by the existing system, particularly the need for a non-political currency that can move around the world at the speed of light. And then 5-10 years later, could they be used more for domestic payments? Maybe, I don't know, but that's not core to my use case. You can get Bitcoin well north of $1 million before you ever use it at Steak and Shake. Again, gold is a $27 trillion asset. When's the last time you bought French fries with gold? I've never done it, and yet here we are.
That's right. That's right. And this probably dovetails into the answer you just gave. But in that article, you talked about how other monetary assets have historically merged in a similar pattern. And I think it's a pretty important framework. Could you just lay out how
they spend much more time even than your average advisor will? And we want to be the resource to help you answer those questions that clients have. I'll say one more thing for advisors, a service that's not on here, but is something that Bitwise holds dear. We have a question answering service. So as an advisor, whether you're a Bitwise client or not, you can ask us a question about crypto that you might have gotten from a client, and we'll get you an answer in 24 hours. It'll be written by a research team member at Bitwise, reviewed, and sent to you an email within 24, I should say, business hours. If you send it to us on Saturday, we're not going to get to it till Monday, but we will get to it on Monday. You can use that at any time, sales@bitwiseinvestments.com, or if you reach out to your local wholesaler, they can hook you up. And again, our goal is to be in the corner of advisors helping to understand this complicated space.
Now, one other tool that I appreciated as I was digging around is this portfolio simulator. Very robust. And again, the resources inside of here are perfect for any advisor who really wants to go deeper. As our mutual friend, Tyro.
And there are huge advances in quantum resistant cryptography. And I'm confident we'll get to quantum resistant cryptography before we have one of those James Bond computers guess all the numbers in the world instantly. Otherwise, you should worry about nuclear codes more than you should worry about Bitcoin. The reason I said it's not an existential threat, but it is an implementation threat, is because at some point in the future, Bitcoin and other crypto assets will have to upgrade their software to a quantum resistant form of cryptography. And many individual wallets in crypto, particularly in Bitcoin, will have to transfer assets to quantum resistant wallets. The analogy I make is something like the Y2K bug. The Y2K bug was something that we worried about, and indeed, if we had done nothing about, may have disrupted certain systems. But it wasn't an existential threat. We didn't all die on New Year's 2020 because we could solve this through traditional work in computer science. The same is true in Bitcoin. There will be a moment where we'll have to upgrade, and that will be a big deal in Bitcoin's history. Even if you top ticked it, if you bought the absolute top, there's never been a 3-year period where it didn't boost your absolute and risk-adjusted returns. And even in 2 years, a 9+% win rate is a pretty good win rate for an asset. So it's designed for long-term allocations. I don't know where Bitcoin's going over the next few weeks, Jay. But over the next few years, I have confidence in the direction it's going.
All right. So I'm a big fan of dollar cost averaging, whether it's you're doing that into a S&P 500 ETF, gold, or Bitcoin. It just seems to make sense during the accumulation years. But if you are in your decumulation years, adding it to the portfolio with a long enough holding time period can really enhance your risk-adjusted returns over a 3-year period. Fair statement?
Oh, I'm sorry. I'm having trouble right now.
No. Are we back on?
I can hear you in and out. Why don't we try one more time?
So I tell you what, if the way I heard the answer to your question is if you're
thing, what would you do with stocks or bonds? You would rebalance them. How often? Depends on your practice. Quarterly, biannually, annually. The most important thing is you have a rebalancing tolerance, and that is true in crypto as well.
Matt, I know you do a lot of consulting with institutional investors as well. Is it the same approach when it comes to rebalancing?
Yeah, it depends on the client. Some investors just make a small pocketed, almost side pocketed allocation and let it ride. But most people we talk to, most professional investors, are rebalancing their portfolios. They're thinking of Bitcoin not as an exotic asset, but as part of the mix, part of the gumbo of delivering better risk-adjusted returns. And it's like a really interesting ingredient in portfolios because it has high historical returns, it has low correlations, it's volatile, and it's liquid. Most people, which is what your clients feel in your gut, right? That's when they call you, which is when they have a big drawdown in the portfolio and they're upset. If Bitcoin is the driver, you can get bad behavioral results. You can get them panicking at the bottom. Conversely, you can get them getting too excited at the top. So we think the right allocation for most people is like 1% to 5%. A lot of people ask me, Matt, what is your allocation? It's way higher than that. But I am not a typical client, right? I spend my life in crypto. I have very high conviction. I have high risk tolerance. But I think for most clients who aren't, in it every day, that 1 to 5% is the sweet spot. I often call it the hot sauce of portfolio construction. Like a little bit is nice and a lot can give you indigestion.
That's a good line right there. All right, let's talk about single asset ETFs. Bitwise is a pioneer in this space. Before we were able to do it at spot ETFs, you guys had some very innovative products to provide exposure. Could you just at a high level discuss for advisors why single asset ETFs can be a beneficial solution when building portfolio
markets? You may have a core position in the MSCI World Index, and then you may overweight NVIDIA, or you may overweight biotech, or you may overweight Tesla or whatever. You can do that within crypto as well, over and underweighting. And then the third thing we see people do is sort of creating their own index portfolio of single asset ETPs and doing their own tax loss harvesting incrementally with this asset or the other one. The goal of single asset ETPs is just to make it easy to access these crypto assets in an institutional setting with high quality custody, staking if it's appropriate, et cetera. And then advisors can use them the way they might use individual stocks or other areas of the market to overweight, underweight, do tax loss harvesting, those sorts of activities.
Matt, I'm embarrassed. I did not know that was a function of these ETPs. So if you end up with a large position, you have a client with a large position in Bitcoin, they can transfer it over to your firm and it gets added to an ETP?
It's something that we do frequently. What's ETP providers? My general view is that you want one best of breed, should stick with that. But we see advisors doing that. As an example, Fidelity uses its own custodian in their ETP. So we see some advisors differing between like Bitwise and Fidelity because they're two different custodians. Bitwise uses Coinbase custody, the same entity that BlackRock uses. But we definitely see people who want that diversified exposure. I would think of it a little bit, to give people an analogy, to gold. Do you want to hold GLD only, or do you want to hold GLD and IAU? Most people are comfortable with a single high quality ETP, but some people may want to diversify their custody exposure. And we see that amongst a minority of investors.
And Matt, since we're almost out of time, I just want to ask one question on the Solana staking ETF. Could you explain that to somebody who doesn't